I'm Matt Bishard with REIT.com here in Atlanta for REITWorld 2014, NAREIT's annual convention for all things REIT. Joining me for this CEO Spotlight is Amy Tait, Chairman, President, and CEO of Broadstone Real Estate. Amy, thanks so much for joining us.
Matt, thanks for having me again.
Now, I'd like to start by talking about Broadstone Net Lease's fundraising and acquisition activity so far in 2014, both of which have been quite active. Can you talk a little bit about the company, what the company's done so far this year, and what your expectations are for 2015?
Sure. Let's start with the capital raising. So far this year, we've raised about $90 million, and by year end, we'll probably top out over $100 million. And that may not seem like a lot compared to the public peers that you've been talking to this week, but we're a little bit different. We are a private REIT, not public, non-traded. We're private, Reg D offering, and all of our investors come to us directly. We think next year will be even better. We have such a great track record and a great relationship now with a lot of wealth managers that have national platforms. They're starting to roll us out and introduce us to more of their clients. So next year, I'm expecting 150, maybe 200 million of equity that we'll raise through our typical channels. So far this year, we've closed $120 million of acquisitions, but we've also sold $26 million of properties opportunistically. So right now, we have a great balance sheet, we're below our leverage targets, and we're very well positioned for what is usually a pretty busy time of year coming into the year end. And this year's no different. We right now today have about $100 million of acquisitions either under contract or under accepted LOIs. And with that, we'll get to about $1 billion of total market cap somewhere around year end.
Well, with all that activity going on, you're just as active with your single-family rental operation, Broadtree Homes. Now, what are you seeing there, and how are you seeing that develop as more and more players enter the market?
Well, we really don't have to worry about fighting for market share in this environment. This is a huge market. There are over 14 million families in this country that live in a rented single-family home. Only a couple percentage points of that are owned by large or institutional investors. So the rest is available for consolidation. And we see a huge consolidation opportunity in this sector, much like we experienced in our history running multifamily apartments. This is a trend that I think will go on for decades, frankly. So there's no rush. But in the short term, in the near term, I see a particular opportunity from a lot of opportunistic investors, very entrepreneurial, came in, did a great thing for this country. They bought properties, assembled portfolios, rehabbed them, leased them for the first time, kind of de-risked and stabilized these portfolios. And they did this with fairly expensive capital. A lot did this with private equity or with high interest rate loans. And now that the properties are stabilized, they're dull and boring, and they really need to switch to a new capital source. They really should be transferred to investors like ours that look for long-term stable investments, that are looking for yield and income as opposed to a quick IRR. And so I think we're very well positioned to move forward and buy some of these smaller portfolios, particularly because we like to partner with these entrepreneurs and regional players that usually like to stay in as managers and stay a part of what they help to build.
And lastly, we've talked in the past about possible liquidity events for your companies. And with your experience in both the public and private markets, I wanted to know, what are the factors that you personally evaluate when determining the right time to make or frankly not make such a move?
You know, Matt, there's one overriding factor, and that's what do our shareholders want? So we did the very unique thing at our annual shareholders meeting last May. This is for Broadstone Net Lease. And we asked our shareholders what they would like us to do. Novel idea, huh? And we actually passed out those little polling clickers, and then for people that were online, they could vote online. And we had about 120 respondents out of our 900 or so shareholders. So I don't know if that was statistically significant or not, but we heard a message very loud and clear because we asked. And we really did not see that very many were at all anxious for us to go public. They weren't anxious for us to internalize management to get ready to go public. And they weren't anxious to sell, even if we had a great offer at a very significant premium. So I would say that while we remain opportunistic, right now we're just continuing to grow prudently and focusing, as we always have, on our per share results for our shareholders, not on our total size. And my guess is that, as with many other things, slow and steady wins the race in the long term.
Amy, thank you so much for joining us.
Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.